What's up everyone, it's Scotty with Money Investing. In this video, I wanted to break down Ray Dalio's most recent report going over the debt ceiling and the consequences of the debt ceiling and the overall debt and the interest payments in the US. So hope you guys enjoyed this video. I highly recommend each and every one of you to go and read his LinkedIn post. I'm gonna go over some brief, aspects of that report. Go over some small nuggets that we're gonna read through together. But I highly encourage you to go and check that out because I did a video on this. Obviously I've been doing videos on this topic with the U.S. debt ceiling and just the debt in general, the interest payments, the fiscal deficit, the mountain of debt. I mean, we've been talking about this for years now, but more specifically, I talked about it in couple videos ago, where it is going to happen in our lifetime because the last 100 years the US has had the pleasure and really the advantage of having the global reserve currency and being able to print a lot of money and finance a lot of the spending through borrowing a lot of money and through debt, which in my opinion at least, and from studying history and just looking at a lot of data, does suggest that the next 100 years are not going to be, unfortunately, like that. And if you are in your 20s, 30s, 40s, if you're watching this video and if you are young, and we're talking less than 50 because, life expectancy is growing and I expect people to live to at least up to 100, in the future. If you're watching this video, if you're under 50, chances are we're going to probably see something happen in our lifetime. The probability is high. Obviously, nobody knows the future. Nobody can predict the future, but it is something that we need to be aware of. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, a 16% discount annual available for all the members, and you'll get access to all the private live streams as well. So this right here is going to be that report. It actually came out on May 18th, so literally yesterday. So what should be done about the debt ceiling argument between the Democrats and the Republicans? So again, I'm not going to go over every single thing. I did get a chance to read all of it, and it wasn't optimistic or promising by any means. So again, if you are going to read it, just understand that it's not painting a very bright picture of the future. So I was recently asked, what I thought of the debt ceiling debate. To answer that question, I will first explain what I think will likely happen, and then I'll explain where I'm coming from, which will give you background for my explanation of what I think should be done. So what he thinks is going to happen. So I think the most likely to happen is that the two sides won't allow a default, or if they do, it won't be for long, and they won't deal with the big issues in substantive way. What he means by the big issues is really this addressing of the debt, right? It's going to be, what he talks about further in that article is that really it's going to be some small tweaks that are going to be advertised in a way that they're actually making changes, right? So it's going to be a lot about political theater, and they're going to make it seem like, hey, we're actually working towards our debt. We're going to work towards our deficit. We're going to make these changes. But in reality, that's not real progress being made, is what Ray Dalio is talking about. Example, they will say that they will cut the deficit in future years, which they won't when the time comes. And that's what is likely to happen. The debt ceiling will either get raised or suspended altogether, and eventually we'll be on our way to once again spending like crazy as we have already done. Moving forward, he says where I'm coming from, and he says, as you know, I'm a global macro investor focused on 5 big forces: the money, credit, economic force, the political force with countries, the geopolitical force between countries, the acts of nature force, and the learning and technology force. And these are inextricably linked to each other, especially the money, credit, economic, and political forces when it comes to the debt limit issue in the US. For that reason, in answering this question, I will start with the political issue because I think that is our greatest threat to good decision making. So he basically kind of buckets every people into 3 different categories: hard left, hard right, and bipartisan moderates. And he basically says that I'm a moderate person, bipartisan moderate. And I don't think we can get anywhere from being hard right or hard left, because it's just really us forcing our views onto the other side, which is not going to get us anywhere. Further, he says pretty much this was the main key takeaway from this entire report, was that because I believe these things to be true and because of my expertise in finance and economics, I believe that increasing the debt limit the way Congress and presidents have repeatedly done, and most likely will do this time around, will mean that there will be no meaningful limit on the debt. This will eventually lead to a disastrous financial collapse. All bold, and this is literally yesterday from one of the greatest global macro investors of our time. And when asked point blank from Warren Buffett as well, he didn't have an answer. He didn't have an answer either. He was like, all right, let's just wait and see what happens, right? So those are some things that you have to pay attention to. Just because it's worked out in the past doesn't mean it's going to happen again. It's just past results are just not indicative of future returns in the market. And I know it's very hard to see right now because we're all grown up in this environment where the US is the greatest country in the world, and it still is, no doubt. And I think it'll continue to be if it can be steered in the right direction, right? There's still, in my opinion at least, there's still a chance. There's still time. And he says, why? Because spending more than one earns and financing it with debt, which we have been doing for a long time, is easy, pleasurable, and not sustainable. That's the key word here. It's not sustainable, right? I think most people, when they think about the US dollar and the debt, is just they think that they can just keep doing it forever, right? It's not sustainable because increasing debt, assets, and liabilities faster than income eventually makes it impossible to simultaneously pay the lender creditors a high enough real inflation-adjusted interest rates to have them hold the debt assets without having that real interest rates too high for the borrower debtors to be able to service their debts. So what he's really saying is that if you think about it yourself, right? If you are at a job, if you're earning an income, if you constantly spend more money than you're bringing in as an income and you are financing that spending through debt, at some point you're going to kind of face reality, right? It's not going to be a sustainable lifestyle. And that's what's really been happening. Of course, the US is a little bit different. It can print its own dollars, which is the global reserve currency, and it can issue those dollars for people who want to buy dollars, and it can obviously borrow that money. So there's a lot of complexities at play, but the bottom line is that it's just not sustainable. This whole lifestyle of fiscal deficit, growing, mountainous amounts of debt with interest payments now approaching close to $1 trillion, it's just further on, he says, interest rates service them when debt, assets, and liabilities reach the point that the amount of debt sold is greater than the amount of debt the buyers want to buy. Central banks are faced with a choice, and neither of those choices are good enough, and the latter is even worse. They say, or Ray Dalio mentions that they either have to let the interest rates rise to balance the supply and demand, right? So they have to compensate those creditors with a higher rate of return, right? Because otherwise they wouldn't want to hold on to a low yielding rate of return, low yielding bond. So they have to jack up the interest rates to kind of balance out that supply and demand, which obviously increases the interest payments, or they can step in and start buying that debt from the creditors, which leads to even more money supply, more money printing, and which is going to be inflationary in nature. So the second point which he mentions, which is crushing to debtors and the economy, or have to print more money and buy the debt from the creditors, which is inflationary and encourages holders of the debt to sell the debt, which makes the debt imbalance even worse. In either case, that creates a debt crisis, and that is like the run on the banks that we have been seeing. And this is instead, it's not going to be on the bank; it's going to be for the United States. Now, reading further, this right here is the last thing I want to go over in this video. Again, I highly encourage you to go read it for yourself because me explaining versus you reading what Ray Dalio has written is going to be completely different. But the second thing, and this is what he believes should be done, and we've talked about this before, right? If you think about the fiscal deficit, why is it a problem? Because we're spending more than we're bringing in, right? So income taxes, the main source of revenue for the government, is lower than the spending on defense, healthcare, education, infrastructure every single year. So that's why there's a deficit. So there's two ways to actually solve that problem. Either one, to increase the income, right, which is increase your tax revenue, or two, cut back on your spending, right? That's going to obviously lower the standard of living for people, but Ray Dalio is saying that that is what needs to be done. So not increasing the debt limit will lead to defaults and or cutting back on basics for those who can't afford cutbacks, which will cause financial havoc and a social upheaval. And that's exactly right. I mean, if you lower the standards of people, right, that's obviously going to create a social havoc because everybody over the last 100 years has been so used to seeing excellent infrastructure, seeing excellent healthcare, education. Of course, there's going to be constant debate whether it's even good or not. But the bottom line is the United States has spent a lot of money, and most of it has gone towards defense. And what I believe should be done is he mentions that I believe that we need a smart bipartisan plan, not only to deal with the budget deficit issue, but for dealing with all of our country's financial, economic, and national debt issues. I think the system needs to be reformed, is what he mentions. For these reasons, I believe that try to settle this issue in a few meetings and move to expeditious answers, and has been done 78 times before, won't fix our basic problems. It will eventually lead to a terrible outcome. And I believe that more structural changes are required. I believe that one of those temporary, quick, kick in the can, down the road type moves, as in now in the works, should happen. But it should be accompanied by a smart bipartisan plan that will take adequate time to be developed. So what he's really talking about is, okay, we need a short-term fix and then we need a long-term fix, right? Every time what we have seen over the last 78 times is basically a short-term fix and then people have forgotten about it. But we need somebody who's in charge, leader, who can actually think about the long-term consequences of what might end up being very terrible for the US. Now again, this is not a warning video. This is not a pessimistic video. This is not supposed to stoke any fear or anything. But it's important to understand and listen to what Ray Dalio is saying, right? Because I hold him and Warren Buffett and Peter Lynch, those three people, in very high regard. Of course, along with Howard Marks and some of the other folks in the investing world as well. But those three, when they talk, I listen, and I think we should all listen because they've got a lot of experience, not just in investing, but in life in general. So hope you guys enjoy this video, and let me know your thoughts down in the comment section below. For me personally, what I've been doing is a little bit diversification away from the US, just into India, and of course Indian stocks. I've been diversifying into them, and I've been sending out alerts to all the members, and then also kind of going into hard assets as well, so physical assets, so physical real estate, gold, things like that. So those are some things that I will be considering and diversifying a little bit more into in the future. So again, hope you guys enjoyed this video, find it helpful. Make sure that you drop a like. Let me know in the comment section below, what do you think about this? As always, happy investing. I'll see you all in the next video.